So you know how life is super busy and there's so many financial products and there's so many financial people, it's hard to make financial decisions. I'm Adam Gain, owner and financial coach of Gain Financial. We help families with businesses as a one point of contact to integrate, coordinate, and organize your whole financial economy so you can save time and energy and live the life you want to live. Okay, so we're continuing on rule number 1, maximum protection at minimum cost. We've gone over the life insurance element and we're going to move into critical illness, so P5. So do a little 101 of that and see how this works. So I would say critical illness is probably one of the most simple-ish covers they have in Canada. You start with a premium and there's different types of premiums you can pay. You can pay a term policy or you can pay permanent. So there's term 10 or term 20. Permanent side, you can get a permanent to 65, to 75, or to age 100. Now typically, we like to do the the permanent to 75. The permanent and term is a lot different than the whole life. With critical illness, the premiums really aren't that much different for a permanent product. And I find the coverage is so much more important from 65 to 75. That's where a lot of people get critical illnesses. So you've got a premium, and by the way, the permanent policies, these are guaranteed level premiums. And the way this works, you pay a premium if you get diagnosed with a critical illness. There's about 24 different illnesses it covers. The main 3 are heart attack, stroke, and cancer. And if any of these illnesses, or if you get diagnosed with any of these illnesses, you get a benefit. And that benefit is paid to you tax-free as a lump sum injection into your account within 30 to 60 days of a diagnosis. So it's a pretty simple type of policy, and it's got a certain purpose. When we look at the protection component, and we're talking about the second level, we talked about these are two-dimensional products. They cover your assets and your income. And we know that our income is very important. And if something happened, and it is much different than a disability plan, critical illness is there to give you a lump sum amount injection into your account so you can take all of the financial stress out of your life. So no financial stress. Now with no financial stress, that's going to allow you to focus on what's important. Right? And a lot of times what we see is if something does affect the family, or it's going to typically affect one person, which affects the whole family. And a lot of times then everyone's going to have to take time off work or time to maybe go somewhere else. Maybe you have to move the family to a different country that has the best type of care or the best equipment. And having this lump sum come in, you can just take that stress away and concentrate on the health. So it's also good to mention that just in cancer, men right now statistically are 1 out of 2 chances of getting cancer in their life, and women are, I think, 1 in 3. So right now, from a cancer perspective, it's pretty important. Ideally, we'd like to get 1 to 2 times income for all of my clients in coverage. That would give you enough for if something happens to one, for you both to take time off, more or less. Does that make sense? Fairly simple. You got a premium. If you get diagnosed, you get a benefit, and then the policy's done. So any questions so far?
I don't think so. It makes sense.
Okay. So there's other things you should be aware of. So first off, there's different add-ons or riders associated with these policies. So the first one is called return of premium on death. And this is almost a no-brainer to add because it's very, very inexpensive. And if you passed away at any time during the policy, you're going to get all your money back on death. Okay. The next one, you can get a return of premium on expiry, or which is ROPX on expiry, or you can get a return of premium on early surrender. And this is your money back at year 15 or any year after, up to whatever permanent product you got. So let's say we get the 75. So you're going to get it at year 15 or any year past that. And so with these riders, you can see that we can get all of our money back if we don't use it. So the way we look at this is kind of like a savings plan. You know, you're going to put money in if something does happen from a critical illness standpoint, which you might want an injection of money, you're going to get that benefit, the policy's done. If you don't, which we hope you don't, you're going to get all that money back at typically age 75, or if we do this early surrender option. Lastly, there is child riders we can add. Different companies are a bit different, but usually it's around $50 per year for $5,000 of coverage, and it covers one rider, covers all the kids, and it's there for them until age 21. You can get more, but it's $50 per 5,000. So you can get up to like 30,000 for coverage for the kids. But this isn't included in your return of premium, and it just drops off when all the kids are past 21.
So would they get the same coverage then that whatever our insurance policy would be? Say if we get a payout of 150,000,
Mm-hmm.
would the children get 150,000 payout with a diagnosis of cancer, or?
So theirs is actually, it depends on how much you get. So they get 5,000.
Okay.
But you can add up to 30,000, but it's $50 per 5,000
Per 5.
per year. So and it like all the kids, like God forbid, all the kids could use it, right? But it never goes away until the last kid is 21.
Okay.
The other big benefit of this rider is there's minimal underwriting for the kids to get their own critical illness policy at age 21. So there's like 5 questions you have to answer, and if they're good, then they can get up to, I think it's about 100,000 of critical illness with very limited underwriting, because you have this rider.
So 5,000 up to the age of 21.
Yeah.
And then we reapply with some paperwork.
Like if you want a policy for them?
Yeah.
Yeah. We get them a standalone policy and very limited underwriting.
Great.
Yeah. So that's more or less like how this critical illness works. Again, it's just part of the overall defense or the moat of this financial castle we're trying to build. And it's allowing us to try to transfer that risk to somebody else. And what we're giving up is some lost opportunity costs, right? We can't, if it's like we have a savings plan, you know, if what we hope to happen happens, we don't get a critical illness, we'll get our money back. But we lose the money it could have grown to.
Right.
And that's where they make their money. It still makes a lot of sense though, right? From a risk standpoint.
Yeah.
Yeah.
Okay. Any questions on this?
No, I don't think so. Like the tax-free part, that's totally, is it tax-free even if there's a return of premium?
Yep.
Okay.
Everything's tax-free, yeah, with
Yeah.
this. Yeah, there's nothing on your taxes or anything like that. Now, it is good to note that we can do these personally or corporately. So we can put them in the corporation, the return of premium and the death benefit would go to the corporation, but you can use lower tax dollars to pay for the premium.
Okay.
Okay, I think that's it. Thanks a lot for watching that video. Check out some of our other videos, subscribe to our channel. Feel free to reach out anytime. We're looking to work with great people long term.